Welcome back. As we have been saying since morning, the government has unveiled some fresh steps to ensure last round funding or last mile funding for stuck real estate companies. And then of course separately there is news, or there is a lot of buzz around Punjab National Bank Housing getting offers from some marquee investors. We have with us the man who can clarify on all fronts, Sanjaya Gupta, Managing Director of PNB Housing Finance. Good morning, sir. Mr. Gupta, we wanted to ask you in detail about your reactions to the last mile funding arranged by the government. But before that, any news at all that we should know about people interested in buying your stock? After all, PNB also will be wanting to raise capital.
Oh yeah, we are in the process, and we will come to the media or to the press once we have formed up the new investors. So the process is on. I cannot disclose anything more than that.
Sir, there's something in terms of amount, timeline, just anything that can be disclosed.
Well, it's already public that we are in the fray to raise 2,000 crores more of Tier 1 capital.
I think we've just lost that line. Now we'll have to reconnect with Mr. Gupta in a bit, but what he's talking about essentially is the 2,000 crore rupees of capital raising that PNB Housing is looking at doing. So, sir, we were just trying to understand whether this 2,000 crores is going to come in via fresh investors. There are a lot of names doing the round, like Carlyle, even the Premji Investment Trust, or whether you have commitment from the parent as well, whether PNB would also infuse funds and retain its stake at the current level.
Well, I would not be in a position to make any comment on who is interested, who is not interested. As I said, the process is on, and we will let you know once we firm out.
Fair point, sir. Okay, let me come to the real estate announcements that have come. How much of your book is been lent to realtors, and therefore how much was the Saturday step a help for you?
Well, we are not looking at any package or anything. 12% of our portfolio is towards construction finance of residential projects, and they are doing pretty all right. And we are confident, and we are very happy that over the weekend the government has made this announcement of last mile funding, and they are putting 10,000 crores forward, and I'm very sure that some marquee, whether it is domestic funds or it is life insurance corporation or sovereign funds, will come forth and make it healthier. Certainly, credit flow on the supply side is must to have. It is becoming quite imperative in the current situation that the only way to build the sentiment back is delivery of homes, and about 50% of the home loan portfolio is under construction portfolio. So we ought to be very sensitive of the fact that the projects which are doing well, which are RERA compliant, which have a positive net worth, which are not in NCLT or NPA, those projects should get delivered on time, and that is the only ray of hope to get the sentiment back into this market.
Mr. Gupta, while I take your point on providing liquidity at the last mile, at the developer end, the counter argument being made is that there is not much to boost demand. And for instance, that's also showing up in your numbers, right? Because your own loan growth rates have been coming down consistently for the last 6-7 quarters, down to I think 28% at the end of the first quarter. So there is a demand issue as well. Would you not agree? And what are the trends that you're seeing on credit offtake for housing loans?
Well, see, the inherent demand is there. In the 8 large metropolitan cities, the demand-supply gap has only expanded from 2.2 million units to 2.5 million units. The question now is the sentiment, because so much has been said negative about the housing sector that people are not willing to make that decision to put in their savings and to lever their incomes on a long-term basis to buy their homes, and they're deferring that decision and they're preferring rental housing. So I think the only way to build that sentiment and get the demand back into the market is to start delivering on time. every time, as I keep telling everybody.
Maybe to also
Okay.
lower prices.
Well, Mr. Gupta, therefore, can you give us some guidance on what may be the loan growth this quarter, because the quarter is almost over, or if you have some sense about what may be the loan growth you're targeting for the year, and more importantly, margins, now that banks are coming very ferociously into this area and have to link their loan rates to, benchmarks.
Being a listed company and already in the silent period, I will not like to give any forward-looking, statements. But let me tell you that the spreads are going to be sustained. And yes, you're right that the banks are coming back into the fray, and we love the competition. Competition has always been there vis-a-vis the HFCs and the banks from last 40 years. From the last 2 years, the banks were a little on the back foot because of their own reasons, and I'm very confident that between specialized institutions, which is housing finance companies, and the banks, a healthy competition will be for the benefit of the customer at large.
All right, sir, we'll leave it there today. Thanks a lot for joining us. That's PNB Housing Finance. Well, the market is very volatile. It's once again recovering, so it's really all over the place.